In response to a request regarding some videos made by Ripple last week, the SEC just responded to Judge Torres. In this video, we'll reveal the SEC's response and explain how it amounts to a giant middle finger to the court and to Ripple. It's not so much what they said as how they said it, and we also have some new information about the case since the judge recently approved a new timeline for some motions that both Ripple and the SEC will be submitting. Some details that neither side wants the other to know are in there. There is a new analysis out that predicts Bitcoin's price will fall over the next couple of months, so we'll be doing some price speculation in this video as well. Macroeconomic issues and technical analysis and charts both play a role. Now, we're going to tell you the number that an increasing number of analysts predict Bitcoin's price will fall. Additionally, there's good news after that. Mark Cuban launched an attack on Cardano and went on a bit of a rant in which he made comparisons between Cardano and his new favorite cryptocurrency. It sounds suspicious, like one Elon Musk discussed on another podcast not long ago. So first, we wanted to bring up John Dean's class action lawsuit against the SEC. It's no secret that John Dean wants to weigh in on the ongoing legal battle between the Ripple and the SEC. He has been organizing a massive class action lawsuit against the SEC. What the SEC has done to XRP holders over the past 2 years, he says, amounts to regulatory overreach and a vindictive attack on the community. In total, 70,600 XRP and non-XRP holders in the US and abroad have joined his class action lawsuit against the SEC. The group's membership is steadily expanding, but the SEC keeps trying to drive them away as far and as hard as they can. Before we delve any deeper into the SEC versus the Ripple case, there are a few other stories that have caught people's attention. First, Mark Cuban was discussing some of his favorite cryptocurrencies, and he made a comparison between Cardano, which is becoming the cryptocurrency community's favorite whipping boy, and Dogecoin, which is a new coin that has gained popularity thanks to the efforts of several people, including Elon Musk and now Mark Cuban. Thus, Mark Cuban was contrasting a Dogecoin with Cardano, despite the fact that such a comparison is technically flawed, because the two cryptocurrencies serve different purposes. Well, Cardano is supposed to be this amazing platform, he ranted a little bit. It was intended to serve as a hub for revolutionary programs that would alter the face of our planet, but in the last few years, it hasn't done much of that at all. To be more specific, it was meant to rescue Africa's monetary system, but has instead proven to be a failure. Meanwhile, he's advocating for Dogecoin, which he claims has more practical use than a cryptocurrency like Cardano, at least in terms of transactional applications. Recently, he isn't the only one to have made this claim. A few days ago, on another podcast called the Full Send Podcast, Elon Musk was asked about the cryptocurrency market and didn't have much to say beyond the fact that he likes Dogecoin because it has better throughput than other cryptocurrencies and is, therefore, a better option for transactions. That sums up his comments entirely on the subject of cryptocurrency. Naturally, he didn't mention how he sold most of his Bitcoins to get by, even though the company has delivered fewer Teslas in the past month than it has in the past several years. Consequently, this is not fantastic news for Tesla. But do tell us what you think in the comments, Cardano, or alternatively, Dogecoin or nothing at all. It got our attention because now 2 billionaires are promoting Dogecoin. You'll have to do a little soul-searching after reading this. Before discussing the recent motions, briefs, and judgments in the case of Ripple v. the SEC, it is important to mention the recent and upcoming price action of Bitcoin due to a few upcoming events. First and foremost, this week sees the release of inflationary data in the form of consumer price index readings. This year has never had a good outlook, and this week is expected to be no different, with yet another increase predicted. There has been talking that this month's figure won't be quite as high as last month's was, but anything more than 9% is absurd. The truth is that anything above 4% even is ridiculous. Speculators now claim that mortgage application volume is plunging, and data shows that average home prices have fallen by more than 5% in some US and Canadian regions. Some analysts predict a precipitous decline in value for this asset class. Bitcoin is currently trading at a value close to $24,000. In this case, the 200-week moving average is providing the support. The object actually ricocheted off of it several times. It has settled into a holding pattern close to the 200-week. Some people believe that these low CPI numbers are the result of short-term factors, so it's important to consider what impact these macroeconomic factors will have. Bitcoin's value typically drops by as much as $1,000 on the same day that these events occur, along with the rest of the markets. Some analysts have speculated that if Bitcoin loses $1,000 when bad CPI numbers are released, it might not recover and might even continue to head lower, given that it is already in a downward trend after running into a major trend resistance line last week. The next drop will be around 9,500, and that's if it doesn't drop lower than that. If it breaks out of that lower resistance, you could be looking at a Bitcoin price of $17,000 or less. We want to talk about the growing number of analysts who predict that Bitcoin will see its actual body somewhere between November of this year and February or March of next year. This is not necessarily this month, and it is not necessarily next month, but it is likely by the end of the year, possibly into next year. Numerous experts have recently predicted that Bitcoin will soon reach the $10,000 to $12,000 or $15,000 mark. They have this suspicion because certain graphs show that high inflation numbers will persist so long as the macros do, especially if the Fed in the United States keeps raising rates. There is widespread agreement that the Federal Reserve will stop raising rates if inflation readings remain at or near 5% in November and December. This is because the Fed cannot continue to do so without causing huge damage to the economy, and they'll just give up and admit that they're sorry, but they've already done everything. At that time, investors will pull money out of the markets at a dizzying rate. It's all going to end up in a bloodbath. Bitcoin and other cryptocurrencies will follow suit, and the price could drop to $10,000 if the trend continues. Several of them have reported placing $10,000 plus purchase orders. Someone mentioned placing buy orders at $7,500. One of those analysts, by the way, predicted a Bitcoin price of fewer than $20,000 when the cryptocurrency was trading at $58,000. For the next couple of months, nobody took him seriously before they finally realized he was onto something. There may be a period of 3 to 6 months after that where it merely chops along, bouncing along the bottom, going up a little bit and down a little bit, really doing nothing, basically going sideways. Elon Musk, however, is predicting a 12 to 18-month recession as things begin to turn around, with cash flooding back into the market, possibly thanks to the Fed and Bitcoin and the crypto markets leading the rest of the markets. Multiple studies have shown that they are not alone in this experience. After such a drastic decline and so many months spent bouncing along rock bottom, why would they be so optimistic now? Why? Because BlackRock has joined the conversation right now. BlackRock's entry into the Bitcoin space through its partnership with Coinbase is monumental because the firm not only manages a sizable stash of US dollars, but also works with numerous multinational corporations and governments around the world. Let's compare the Ripple scenario with the SEC case now. This is merely an instance of the SEC being disrespectful to its own courts. As one commentator put it, what the SEC just did is a waste of the court's time, which is basically what James K. Filan said on Twitter. To that end, Ripple has written the judge a letter informing them that they have 7 videos. They have numerous recordings of the current and former heads of the SEC making various declarations. They want these videos verified so that we can submit them as evidence. The judge has been presented with an official motion from Ripple. The SEC responded to Ripple's request with a single sentence. He affirmed that the SEC is neutral on the issue of whether or not Ripple should request a new round of fact discovery. That required 5 days of brainstorming to produce. James Fileman argues that the 5-day wait for a one-sentence response shows a fundamental lack of respect for the judicial system. The court wasted its time trying to make sense of that response because it was completely misconstrued. Ripple had included the videos in its RFAS that were sent out during discovery prior to the end of discovery, asking the courts to authenticate them. What this means is that Ripple can act in this manner without consequence. The second is essentially arguing that Ripple wants these videos to be authenticated and that Ripple will be reopening Discover. But the SEC said that it is in a single, extremely well-considered sentence. We eagerly await the judge's ruling on this matter. Perhaps her response will be a short letter stating that the defendant's motion is granted and that fact discovery will not be reopened. At the same time, the judge made a decision on a motion in which both Ripple and the SEC had requested that the other side not be privy to the contents of their expert witness testimony until after it had been submitted to the court. James has now confirmed on Twitter that the documents will remain sealed until Judge Torres has had a chance to review them and determine how to proceed. Therefore, until then, neither the Ripple nor the SEC will have access to the other party's expert witness data. Okay guys, we appreciate you sticking around until the end, hitting that like button, and we'll see you in the next video.